That's crazy.
Hey, Facebook.
Facebook.
It's me, Takia, your Keller Williams realtor.
And I'm Tim McDowell, Senior Loan Officer with Empire Mortgage in Lexington, South Carolina.
And as stated, we're having a live buyer question and answer session. So we're just sending, like I said before, send your questions. You can drop them in the comments. And of course, I know some people are camera shy or whatever shy. So you can send them to my inbox. I won't be able to answer them now. Or, well, we won't be able to answer or address them now because of live. So we'll get to them later. But come on, everybody. Bring the questions.
Absolutely.
Bring the questions.
Yeah. But can we discuss that situation? Kind of like, well, because it's a situation probably that a lot of people get into with signing with an agent, not really knowing what they're signing, and then kind of getting themselves caught up. And then for the short term, at least, maybe having to work with somebody that they don't want to work with, or may have some of their money's tied up. So I just wanted to know if you kind of wanted to touch on that just a little bit, like buyer's agency, making sure you get the right people, don't sign anything until you.
Well, what I would say is, with that, it's always important to interview your agents. I mean, I know some people love to work with family and friends, but sometimes family and friends, you know, can kind of, exactly. Yeah. So interview your agent to make sure your agent will best represent you.
Absolutely.
And if you're already in, just like what you just stated, if you're already in a buyer's agency agreement and you're not happy with that agent, you can send an email or send a letter stating that you want to terminate effective immediately.
Okay.
And the only problem is with the buyer's agency agreement, if there's a specific time frame in there, or whereas it might be a house that the agent that you no longer want to represent you has introduced you to a house,
you got to stick with it.
You still have to pay them whether
if it's that house.
If it's that house.
Okay.
But if it's not that house, then you're good.
Okay.
But yeah, send a letter or an email of termination, and and that should be it.
Okay.
Yeah.
Perfect. That's like the everyday situations, kind of like we deal with. We bounce ideas off one another. Of course, me being in the finance industry.
Hey, Desmond. Hey, Sasha.
Hey there. How y'all doing?
That's Sasha.
Yeah, that's Sasha right there. Yeah, we were texting a little bit earlier.
Okay.
She went and took care of her business.
Good.
So we on track.
Yeah.
So we help people too. I think one of the biggest things for people who are looking to buy their first home is they really just don't know a lot about what needs to happen. And I think that's what's really unique about having a good realtor finance relationship, because you got to be able to talk to real people.
Exactly.
And a lot of times when you're dealing with people that just you may not know, or you just don't have that level of familiarity with, you just don't ask them the things that you really want to ask them.
Yeah.
And sometimes, because we want to try to make the whole home buying experience an educational one, as well as
Thank you, Desmond.
Okay.
Go ahead.
All right.
Thank
What's
you.
up, Desmond?
He said you're doing great.
Okay.
He's an agent out of our office.
Okay. All right. But yeah, just making it informative, making sure that people know that we want them to. It's not going to be their last transaction.
Exactly.
So I want to try to teach something along the way too.
Yeah.
And there's a ton of more finance options out there probably than a lot of people think that are out there. So you got to kind of, if someone tells you, hey, look, we can't do it, or whatever the case may be, you got to still kind of be committed to the process. If you're willing to work, and you got good people on your team with your financing, your real estate agent, and all that commitment is eventually going to turn into home ownership. So,
exactly. But you have to follow through. I've
you
had a lot of people in my past that, they get discouraged. They have to go through credit repair, or the lender tells them it's something they need to do. They get discouraged and continue to rent, continue to pay somebody else's mortgage. Hey, Keisha.
Exactly.
But
so,
yeah,
Keisha.
So, but if you follow through, and this man right here, Tim will make sure, I mean, if you follow exactly what he tells you to do,
we're gonna make it happen.
He will make it happen. Yes, he will. That's why he's on my team.
That's exactly right.
Now, where the questions at? Come on, bring the questions.
Yeah, I know some. And you know what's, and the thing about it is, I think this is something we often talk about. I think everybody wants to achieve home ownership. They just don't know how.
Don't know how.
And you gotta, so regardless of where you are, if you're renting, you've been renting for years, you may have to continue to rent for a little bit more.
Yeah.
You gotta get yourself in the game.
That's true.
In order to, you know, kind of proactively put yourself in position to buy your house, you know, because, you know, so that's kind of the thing that, you know, we kind of pride ourselves on kind of doing that.
Everybody, I mean, I'm glad you said that, because everybody, some people, you have to weigh your pros and cons. I mean, we love for you to, you know, we love to promote home ownership, but some people have to, you know, continue to rent.
For a little while,
for at least a little while.
Yeah.
But it shouldn't be a lifelong thing.
Absolutely.
What company are you with, Tim?
I'm with a company called Empire Mortgage. We're out of Lexington, South Carolina. We work on the wholesale side of mortgage lending. So, and what that simply means is that we provide a baseline of products that a lot of your retail places don't. Like, so if you walk into a Bank of America, get denied, Wells Fargo, get denied, chances are you may be able to come to me and I'll be able to approve you. You know, people often say, something my grandfather liked to say, you know, education, knowledge is king. You know, what you don't know truly will kill you. Because sometimes, you know, you're thinking that, okay, I can't get approved, somebody turn me down. It may be because their work ethic wasn't there, their commitment to getting you into a home wasn't there. I found a good group of people with Empire Mortgage, and we're a small shop, but we're down-to-earth people, and we understand that you know, everybody needs to be served, just not people with 700, 800 credit scores. Everybody wants an opportunity to do better for themselves, get a house, be a homeowner, build wealth, that sort of thing. So, Empire Mortgage, Lexington, South Carolina. Yep.
So Desmond, you gotta send some business to my friend.
Yeah,
he's good now. I'm serious. He's good.
Yeah.
Many people that have heard no.
Yeah.
Not all, but many.
Exactly.
They said yes to.
Absolutely. Yeah.
Thanks, Desmond.
Yeah.
Hey, Catherine.
Thanks, Des.
Do you have any questions, Catherine?
She probably does.
She may. Yeah.
Oh, that's Melita Hayward. Yeah.
No, Melita.
Yeah.
Yeah. She's been on my Facebook for a while.
Okay. Cool.
No questions.
And I know you do. Now it's kind of like a feed that comes in with the questions. You
Well,
get like
the same. Yeah, with him, the same. Like there, where it says they can actually drop them in the comments. And like when this is over, you'll see all the questions.
Okay.
Yeah, you'll see all the questions.
All right.
And she said no, but keep up the good work. Thank you, Catherine.
And I think too, a good point for us to talk about. This may be.
That's a question for you. What are mortgage lenders looking for on your report?
Well, that's a tough question for us. Most of the time what they're looking for is for you to have some established credit. Usually one or two things that you're paying for that's on your credit, maybe a vehicle, maybe a small credit card, maybe a small loan that you have that you pay on a week-to-week basis, whatever the case may be. But we actually have programs that don't require people to have anything on their credit. Now, I will tell you, having nothing on your credit is far better than having a credit report full of garbage. So sometimes what will happen is, you know, if all of us get into little ruts in life, and we sometimes have those collections, charge-offs, that sort of thing. So we kind of, depending upon the loan program that you're actually choosing, we're going to monitor the point where that last collection may have happened, when that last charge-off may have happened. But most importantly, we want to see that you've at least established a good credit behavior in terms of your payment history and that sort of thing. And I think another thing too important is credit score, because we're one of the only companies that go down to a 500 credit score.
Exactly.
with our FHA product. You know, 580 with a 3.5% down payment. If you're a veteran, we don't have any score requirements, so that's a good thing. If you have your certificate of eligibility, we can help you with that, and that's at 100% financing. In fact, you know, we just closed one of those just in the last couple of weeks or so. Something that somebody got turned down and got 100% financing. Actually, ended up getting money back at the closing table. And it was it was just really a phenomenal thing. So our product line is just, you know, it's kind of a secret almost. And so, you know, we trying to get it out there, but you know, we work on this stuff every day. So so hope that answers your question a little bit.
And the 3.5, that's, I mean, even with the low credit score, I mean, that's no different from, which is the regular FHA financing, where it's 3.5%. So you're not paying any more than a person with the high credit score.
If you got if you got an 850, you still paying
3.5% down.
Exactly.
So
but and down payment, and of course our down payment assistance program, which is 100%. It's a 620 score. But see, that's the value again of us, you know, having a good team to work with, because we'll help you to get to that 620 mark, so you can get 100% financing. So no home buyer classes, no certifications, no waiting periods. If you got the score, they coming, right? Okay. You want to try? Let's get to some of them.
Kat, the difference between rent to own and buying is because when you're renting to own, you're actually still paying somebody else's mortgage. If their insurance goes up, or if their loan program is an ARM loan, that if their mortgage goes up, your rent goes up. So buying your own house, you're actually paying your mortgage. You know whether it's going up or not.
Absolutely.
Can I scroll down? No,
I think somebody just asked something about the down payment assistance program.
I think that was my Jerome. He asked about, can you go in a little more detail?
Okay, so with the down payment assistance program, it's a little bit different than Richland County, Lexington County, you know, City of Columbia. You don't have to go to any classes. You don't have to be certified. There are no income restrictions. 620 credit score. We're going to get you your down payment. That's going to be 3.5%. Up to $10,000. So, and that's day one. So if you come in and say, I'm ready to buy today, we don't have to say, hey, look, unfortunately, Richland County is, they're booked until next year. So you have to wait, pay that landlord again for another 6 months. So that's one of the great things about, you know, kind of what we do. Got that day one down payment assistance, and people are just, you know, really just jumping all over it.
And I think somebody said something about the
VA?
Veterans,
Okay. Well, you remember what the question was?
It was going that one.
Just going in detail. Well, the biggest thing with that, with the veterans loan that we have is the most lenient. And the reason why is because the the United States Department of Veteran Affairs, they guarantee a portion of the loan for all veterans. So if you have a certificate of eligibility, you can be active duty, you can be retired, whatever, you know, you got your DD-214 if you've been honorably discharged, whatever the case may be. We have no credit score requirement on that product. Now, I say that with enthusiasm, but at the same time, there's still some other things we're going to check. We're going to want to see that you have at least been responsible for the last 12 months. That's the only thing we ask of you. We ask for that in the last 12 months that you've done all the things to correct previously bad credit behavior. So that's the only thing we're looking at. So,
and is that through, like, I guess, all the programs?
What?
That 12 month?
Well, no. Now, say for instance, like with FHA, you can have collections and charge-offs and that sort of thing, but we have to calculate it into your debt-to-income ratio. So you've got to have other compensating factors that are going to kind of supersede the lack of, you know, time frame that kind of but you know, we do a lot of FHA, so that's really a home run for a lot of people with kind of marginal credit or really just getting their credit started. So it's a great program for people who are starting out.
Yeah.
Some more questions?
And I see
on there?
Desmond said, I see why you've been closing so many loans. You got a great people on your team.
Well, yeah, man.
This the man, Desmond. He is the man.
Well, yeah, we got to.
Oh, my cousin. Can't wait to. Oh, me either, Takia.
Oh,
I'm going to get you there. Whatever help you need, we're going to get you there.
I know you are. That's right. We'll see what else we got here.
Student loans are now being taken into consideration for loans where before they were not.
Yeah, that's true. And I'm going to tell you something about our community. You know, we go to school and because we're always trying to get that education to do better. And sometimes it takes a little longer.
Yeah.
So what you'll find is a lot of people they'll have really huge student loan balances. So now here's the thing. With FHA, I think FHA is more or less what we use more and where we run into the most problems with student loans. Because the guidance that they've given, so if you got $100,000 worth of student loans, I don't care if you're paying them, I don't care if they're deferred, I don't care if they're in forbearance, the lender is going to use 1% of the actual total loan balance. So if it's $100,000, they're going to count $1,000 against you in your debt to income ratio. So here's where that difference kind of comes in and hurts people. If you're making $3,000 a month, right, and you got $1,000 in student loans, you're already at a 33% debt to income ratio.
Yeah.
We already know that we probably can't go too much above 50. So if you got a car, if you got credit cards, you got other loans, and you want to buy your house, all that has got to fit under that cap. So veterans is a little bit different. They're a little bit more lenient, and so is some of the other conventional stuff.
So can you explain the vet part real quick again?
Okay, so with the veteran loans,
yeah.
no minimum score requirement, and we want to see that 100% financing. We don't care what your score is, but we want to see that you've not had any bad debts to hit your credit report in the last 12 months. That's what we're looking for. Now, if you don't have much credit that's open, say you don't have a car, you don't have a credit card, we can use your rental payment. If you've been paying your rent, the lease is in your name, and then you can add that to your credit. You can use your SC&G bill. You can use your cell phone as long as it's not prepaid. So it works very well.
So your debt to income ratio caps at 50%?
No, the caps are not at 50%, but it just depends on your credit grade and what other factors you have that will say, okay, yes, we'll allow for this person to go a little bit higher. If you've got a little money stashed away, checking, savings, 401k, then the underwriter is going to be a little bit more lenient towards you going higher on your debt to income ratio. But the rule of thumb is 50% is where you want to be in order to kind of keep things in the boundaries of what's allowable.
Hey, Adriana. Say hey, y'all.
She's there.
Was the debt to income, that's what I've been meaning to ask you. Was the debt to income, did it used to be less than that?
Well, I mean, it is really a little bit less because usually you want to be at 43%.
Yeah, okay, that's what I remember.
And so even when we talk to people, we want. It's another question.
Yeah, go ahead.
What we want to do is even when, we want to teach people. We don't want them to have like really exorbitant debt ratios anyway because they got to pay the mortgage. We don't want them to default. So we want to be responsible in doing that. So just because the underwriter says, okay, we'll let you go up to 50, whatever the case may be, doesn't necessarily mean that we should do that as consumers. But that's a part of the education process we oftentimes talk about, just making sure our people have knowledge. Yeah. You know what I mean? Yeah. So just because you're approved don't mean you might need to get that $200,000 house. But,
yeah, exactly. I agree. Never max out.
Yeah, never max out.
Yeah, stay as low because you never know what your situation going to be down the road.
It could change.
Your income can change, and if you didn't max out, you might be okay.
You're exactly right.
She asked, Keisha asked whether the underwriter was in-house.
No, none of our underwriters are in-house, but it feels like they are. We work with about 32 different banks, and we know who to take where. So it's just kind of a pick up the phone, email, text message, IM type situation. So we don't have an underwriter in house, but we have total access to our underwriters. And I think somebody asked too about the max debt ratio. It can go above 50, but it's going to depend on what the system we have. So when we get a loan, we put it through an automated system, kind of like when you apply for a credit card online. It'll tell you whether or not. On veterans loans, you can go as high as 65%. And with FHA, 57 is going to be about your max.
Got it.
Yeah.
Got it. Okay.
If it's a standard approval. Yeah. You know, you got standard approvals, and then you got some that are what you call a manual underwriting.
Okay.
But we won't get into that today.
I know.
Yeah.
I know. Okay.
But that's for the lower kind of, if you got marginal stuff kind of going on. Yeah. So,
Okay. Okay.
was there any more questions?
Any
you
more
saw?
questions? We're here.
Yeah, this is good.
Yeah, and financing is always first. That's why I wanted to bring Tim on, because get financing first, get pre-approved first, then you come to me.
Makes it a whole
Or
lot
if
easier.
if you prefer to come to me, that's fine, but I'm gonna send you to Tim.
Yep.
But he is the one that determines the amount that you're approved for. I don't determine that amount. He determines what you're approved for. I find your house within that price range that you're approved for. So.
And she's good at it too. She be working. She be working. It's a hard-working lady right there.
No, you.
Yeah, hard-working lady.
Yeah.
Is that a
She
question?
said that's great information.
Oh yeah.
Yeah, Keisha, give my friend some business. He is good. I promise you, I'm telling you, he calls me if I have questions. I can talk to him late at night.
Absolutely, and that's something we pride ourselves on. That's right.
If the clients call me late at night, which most of the time I am up, I can text him and that phone will ring. He will call me. He is there.
Absolutely.
He is there on vacation. He's there.
Absolutely. Yep. Even when I'm on
he's good.
vacation.
Exactly.
That's right. Yeah.
I'll get it to you, Keisha. I'll get it to you. I promise I will. I'll get it to you.
Now, you know, I got to say this too. This is my first time on.
Yeah, this is his first
Face-
time
yeah,
live.
yeah.
I've gotten a little comfortable doing it, so I'm making him do
Yeah,
it.
this is the chairman of live right here.
I'm making him do it.
Yeah.
He gotta get his
And,
face out.
and listen, we came here today, and I was thinking that we were going to have like a trustee board meeting or something. You know what I mean? I'm thinking we're going to be in here talking in front of the room, and she brought the tripod in. And,
I sure
and
did.
we just
She
sitting
got
there.
scared.
Yeah, I was like, wow.
I started seeing sweat.
I did, and my head is bald, so you know it got real ugly real quick. Yeah.
Oh, Stacy, my cousin Stacy. I'll definitely send you that information. She's a veteran.
Okay.
So,
All right, cool.
yeah, she's a veteran.
Cool.
So
Cool.
so that's for that. Thank you, Keisha. Thank you. She said we're doing a great
Hey,
job.
thanks, Lakeisha. Appreciate that. That gives me confidence for the next time we do it. Yeah.
Yeah, because we're going to do it again.
Yeah, I know. Yeah, we got to.
You won't be sweating next
Yeah,
time,
I will not be sweating. I promise you. I will not. Yeah.
Oh, no, he got real scared,
I
y'all.
was
Y'all
like,
should,
man,
if y'all could
wow.
have seen the expression
Yeah,
on his face.
yeah, I'm telling you, it was. I know it was priceless. Yeah, it was. It was.
Oh, it was funny. So,
But yeah, I think. What else will we probably want to touch on today?
I know what I want to do.
Okay.
As far as like the seminar or workshop type thing.
Okay.
Definitely sharing. Thank you, Cordelia, my cousin. You've done well. Thank you, Stacy. Thank y'all. As far
Claflin
as
in the house.
oh, you know Renee?
Claflin. Hey, what's up, Vern? Oh,
Yeah, she went to
wow.
school with me. Yeah.
Because Vern is from Winsboro, right?
Rita, yeah.
Yeah.
Mm-hmm.
Vern, good to see you.
Yeah.
Yep, that's her. Yeah.
What I'm gonna do is I'm gonna I guess in a poll. I'm gonna send a poll out because we're wanting to incorporate some workshops in, and the poll is gonna be what you guys, I guess, as buyers are, you know, the difficult the questions. It's questions that you need answered, but what more so is it that you want to discuss? You know what I'm saying?
Absolutely.
We can kind of.
Yeah, just kind of like the questions that matter to people who want to buy.
Because this is just a a little tiny
little
session.
tip of the iceberg.
That'll go more into detail and more,
Yeah, because and you know what, and that's important too because and like I said, it's just asking the questions that you want to get answered.
Mm-hmm. Yeah.
And it's hard to find people that you can really, really talk to and say, you know what, I need to talk to you about this, or I need to discuss this with you. So please ask your questions. We'll get all of them answered. Fast, late at night, by text, by phone,
early morning,
whenever you want, however you want it.
Early morning,
yeah, however you want it. Yeah.
Yeah. Okay, well, I guess
Yeah, well,
I guess we can conclude.
We'll go ahead and wrap
But
up.
still, if you guys still have questions, hit me in the inbox. You can text me. You know that 803-446-2905. Inbox, Facebook, call me. Whatever the case may be. So he's the one that approved. Yes, Tyrone. He is the one that he gets you. Yeah, he works it out to get you pre-approved.
Yeah.
So yeah, it's him. It's him. So.
I'm gonna get you the money, Tyrone.
But we're gonna wrap up. And like I said, call me, text me, Facebook, message me, call me through Facebook. Whatever the case may be.
However you gotta do it.
Whatever way you gotta
That's
do.
right.
Whatever you got to do to reach me, I'm here. But it was fun. We're going to incorporate more of these because this was fun.
It really was.
Even though
and
he
it
was
went
scared.
fast, and even though I was scared.
He was scared.
I had to shake that load off, man. I'm good now. I'm good now.
Okay, Felicia. Go to the home bar. You can't. Well, we'll talk. We'll talk, Sasha. Okay, Jerome. That's my Masonic brother. All right, guys. Well, we're gonna say goodbye, but we'll be doing this more. So, but thank you for your time.
Thank you. And buy that house.